Hi there, welcome back to the Family Fire Mission. This is the monthly income SITREP for June 2026. The Family Fire Mission documents how a single income military family is building a second sustainable income through disciplined dividend and income investing. The objective is simple: replace earned income with reliable cash flow, methodically and transparently. Quick disclaimer before we begin. This video is for entertainment and educational purposes only and reflects our personal experiences. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any security. So starting from the top here, we're still in the launch phase with 10 income engines active, and our 3 active reinvestment engines are QDTE, XDTE, and RDTE. Our monthly income for June 2026 was $291.64, which gives us $3,208.36 until we reach our goal of $3,500 per month. That is also equivalent to an 8.33% of our goal that we have completed. The 3-month average income growth is positive, finally, at $3.43, which gives us a rather large time to target of 937 months, but we'll see that change every month, essentially, as we get closer to our target. The gross portfolio value at the end of June was $21,453, which is $61 less than last month, month over month. The portfolio yield on cost is 17.88%. And moving into our cash flow status, so we received $291.64. We reinvested all of that money, and we have not used any of our income from this portfolio to pay for anything. Our margin usage was at $2,220, or approximately 11% of the portfolio value. Looking on the right here to our engines, we have blocks still as the highest income last month at $86.30, and then RDTE with $51.55, and then QDTE at $50.31. We will continue to see these grow, specifically QDTE, XDTE, and RDTE, as those are the ones I'm currently prioritizing for reinvestments. So moving on to our milestones here, we completed all of our level 1 again, and now we're back, almost hit that level 2 first one at $300. So we're getting back up to where we were at previously, which is encouraging to see. We haven't made any changes as far as buying any new tickers, so everything has just been reinvested back into QDTE, XDTE, RDTE for the most part, and then I have QQQI, SPY-I, SPMO, VTI, and IWMI as automatic drip. So when they get those monthly dividends, they just reinvest automatically back into themselves, so we can continue to grow those assets. So looking at our weekly portfolio monitor here, so we've got the month of June here, so I included the 4 full weeks, and I haven't built out the first week of July is what I'm considering it this time. So the first week of June, we were down $924 overall, and that put us at a cumulative negative 2.77% all the way from the beginning of the portfolio back in November of 25 to now, so negative 2.77% after that first week. And then we were positive 477 that second week, so we were back in the positive for cumulative, and then positive again the following week of almost $400. Again, continuing to be positive in cumulative, and then this last week of June, we were minus $500 and dipped back down into the negatives at negative 0.87%. So not great as far as total return from the beginning, or returns from the beginning to now, but it's better than where we were here in March, where we were at negative 17%. Moving on to the monthly portfolio monitor. So we're looking at this row here now. Our net account value at the end of June was $19,231, which was $8,000 off of our goal that we'd established previously. Some of that is carryover from previous months of not doing so well. And then our total dividends, like I said, were higher than last month. So we were $50 more in the month of June than in the month of May. And that's still $800 less than where we wanted to be. Our total interest was $24.58. And so our total interest was $24.58, which is $4 less than what I had anticipated. Our gross account value was $21,453, which is $8,000 less than what we'd anticipated, with a total deposited of just under $5,000 for the entire time from November 1st to now. Our margin equity stayed pretty similar from last month, just 1% change from 88 to 89% at $220 or $2,220. And then we were using $400 less of margin than we had anticipated at this point. So moving on into Snowball. We're going to start here with the normal disclaimer that Snowball is a little bit off from the actual numbers due to a variety of reasons, but it's pretty good at showing the overall trends. So we're going to start at the top. So passive income estimate is approximately 18% or just under $4,000 annually, which is up from previous. Then we look at our current allocation is 20.43% into our cruise phase, which are our NEOS funds, so QQQI, SPY-I, IWMI, and BTCI. We'll see these change pretty drastically over time. We will see these launch phase ones increase significantly first, as we continue to reinvest back into QDTE, XDTE, and RDTE to generate that monthly income. And then once we have that income for the launch phase, then we'll go back into the cruise phase. And then these terminal ones will continue to grow as they are primarily our growth assets there. Like I said, the numbers here are a little bit off, so it shows negative $3,000 of margin, but it's really at negative $2,220. Moving down, we're going to go into dividends received. So for June, I'm not sure why it says 315, but it was 291 is what I got. In future payments, it's showing that we should have a monthly average of 323, and right here shows just under $4,000 again. Even within Snowball, like I said, so this is 3,878, and this is showing up here 3,911. So even within Snowball, they're different. But it's good at showing the overall trends, right? You can see here over time, the last 6 months here, we've increased our dividends pretty good. We'll see finally when we get back to November, December is where we'll be able to compare really year-over-year dividend growth. For our goal, it says achievable in 5 years by 2031, and we'll see if we can get that to happen a little faster. So then we're going to take a look at the portfolio value relative to the different indices. So we're going to start with S&P 500 here, and we're just going to do the last month. So we are down 0.32% from the S&P 500. You can also remember that we were down $61 month over month, and part of that is because of that 11% margin So our downturn was a little bit more than what the S&P had. Just like when the S&P goes up, like here, we go up a little bit further, and then when it goes down, we go down a little bit further. So that's a good and a bad of margin right there, pretty easily shown. Relative to the NASDAQ, in the last month, we're up 1.86%, which is pretty good. And then relative to the Russell, we're down 4% over the last month. So the Russell had a great month. But we were down 4% compared to the Russell. The relative performance here doesn't change any of our portfolio rules or actions that we're taking. It's just kind of a neat, fun thing to look at and see how we're doing compared to essentially the rest of the world. But looking ahead to next month, the plan remains unchanged, and we will continue to focus on our Roundhill weekly QDTE, RDTE, and XDTE, and then those the income will be reinvested back into those as we have done in the previous months until we hit that allocation. So that concludes this month's SITREP. The mission is continuing on. If you are following along, the next update will be the mid-month checkpoint, approximately midway through July. And then we'll see you then. Thank you for watching.